Good afternoon, and thanks for joining us for the Monday, January 12, 2015 edition of Ask the Experts. I'm Chris Grams, I'm with CME Group, and I'm joined today by two grain and agricultural experts who will be sharing their insight on today's numerous USDA reports. To my immediate left, Dan Basse is president of AgResource Company, a domestic and international agricultural advisory firm which he founded in 1987. He's also an esteemed economist and has been in the commodity business since 1979. To his left, Virginia McGathey is president of McGathey Commodities, which she founded in 1987. She's a broker on the CBOT trading floor where she's been a member since 1983, and she regularly provides expert commentary on commodity and financial markets. Thank you both for joining me today. Well, we've had a number of key USDA reports today. It's the big January report day. We have very little time with our online guests, so why don't we jump right into it? I know we can't cover on all of the reports that were issued today, but Dan and Virginia, maybe, Dan, we can start with you. What are some of the top line results? What are some of the things that stick out from today's USDA reports?
Well, you know, Chris, what really stands out to me as we look at the report is when we start to look at global markets, because agriculture has really become global. And when we think about the world wheat, corn, and soybean crops, the pillars of the grain industry, if you will, this is the first time since 1960 the world has produced record large corn, soy, and wheat crops all within the same crop year. So this is rather important from that top line supply avenue. The U.S. also produced a record large corn crop, a record large soybean crop, and so it's that supply pressure that has been weighing on the market. Though again, when I look back at corn, the reason we've rallied corn the last 60 or 70 cents has been because that crop has gotten smaller. We went from expecting a 15 billion bushel crop to something that came out today at 14.2.
Well, what's happening now, even on the trading floor, we have a lot of activity with the Globex, really strongly in place. The volatility has gone crazy. Worldwide markets, are all a part of it. Number one, the soybeans has, moved like $1.50. Like that's just commonplace. Even this happened in the last 2 weeks with wheat, and so we really are preparing now for the market to move that way, especially with weather. Since the past like 5 years, the extreme is the norm. And so we really always have to prepare for that and look forward to it. Now with this report coming in, it really put a lot of pressure on soybeans, and now it looks almost like we're hoping that the $10, will that hold. It just lets us know there's a lot of beans out there. And, will China step in and start to buy it? I mean, that really is going to give us some support. There has been some demand in the oil and meal markets. That's giving it some support, but we're really watching Brazil now. So there's so many moving parts around the world, and that really is going to give rise to where the prices are going from here on out.
Right. Well, these reports are followed so closely, not only here in the U.S., but around the world. Were there any big surprises in the reports today for either of you?
Well, go ahead.
Yeah, no, that's all right. You can start with that.
I would have thought maybe the USDA would have lowered their Russian export estimate more in wheat. We learned a few weeks ago the Russians are about ready to, or on February 1st, will put a tariff in place of about no less than $43 a ton. It can go up from that depending upon the value of the ruble and the price of the wheat. And they only cut it by 2 million tons, which was met by larger European and larger Canadian and larger Ukrainian exports. So the wheat market had rallied $1.25, Chris, in the last, really since early mid-November. And now we find out that it really amounted to 2 million tons of demand. And so that's why the wheat market's come back down so much. To me, that was a surprise. I thought it'd be more like 4 or 5 million tons, not the 2 that they cut.
Well, doesn't it stand to reason, too, that the oil is so low and it's such critical for the Russian market? So that's also playing into it, notwithstanding their issues with the Ukraine. But their economy is really, having trouble. And so as the dollar continues to get stronger and oil and really the lowest it's been in 5 years is definitely going to be affecting the Russian economy. And that is absolutely going to dictate what they're going to do with the wheat market. And so there's so many things in play that are going to push that down. But clearly, to me, this kind of told me that if we get good weather, everything really looks to the downside. I thought that for the market to really go higher, even on all the crops, we really need something to feed the bull. We got a few things with corn, but look, it ended up to 2 cents. Nothing really that big, and everything's kind of sinking here. But everything can change day to day, so it's really lends itself to a pretty volatile market.
Well, you both work very closely with producers, with hedgers. What's on their mind right now after today's reports?
I guess, Chris, I would respond. A lot of them are thinking about old crop sales yet. Maybe they're 50% sold on corn, a little more on beans, 60 or 70% is what we measure. We would guess that they would be thinking about, well, when should I get rid of the old crop and what should I do with new crop?
Right.
The report today, when you look at the corn market, the one thing that stands out, we did have a smaller corn number. The corn number dropped to 14.2 billion bushels, down about 216 million bushels, but the demand dropped also. We've dropped 100 million bushels off demand because of feed and residual, a larger stocks number. And so the corn market, you'd like to say the stars aren't aligned, because if you want to have a real push above the recent highs at 417, we need demand and supplies both to go down. And today that just didn't happen. So if I'm a farmer, I'm looking at this 405 to 415 level to say, hey, you know what? This is probably a good place to be selling some old crop corn. And on new crop, if you got new crop corn, in my mind, up to 435 or 445, that would be an excellent spot to be at least be 20% sold on new crop.
Do you find too then that with the market so volatile that you have producers or even farmers coming in trying to find new products to utilize their hedging points? So since we have like short dated options and some calendar spread options and even options in general allows them to be a little bit more flexible or to kind of like buy some insurance to participate in the market that way, because the swings in the market are just so hefty that it could really be deep in their pocket if they're wrong, even for a little while.
Well, in 2 weeks, Virginia, don't we start the insurance countdown,
yes,
if you will?
Yeah.
The 1st to the end of February. And so, I guess also if I'm a producer, I'm worried about locking in or, locking down some of that insurance payment that'll be forthcoming or could be forthcoming if indeed I chose the ARC or the PLC option, depending which one the farmer chose this year. But I sure think some of those short-dated options that would look to protect some of that revenue insurance would be worthwhile, at least at this time frame.
Yes, I think there's a lot more people getting involved. I'm seeing that even in the options and the open interest for corn and soybeans, and even in the wheat, that people are stretching it out a little bit further and really setting up their positions to expect more volatility for whatever reason. Whether we have all the different components in place. We have bad weather. Something happens in Brazil, Australia, even up here in North America. I mean, if the oil continues to go down to a 40, dare I say that someone said that $40 level, if it continues to go down that low, what impact will it have on on the grains? And it's going to be a very interesting number if we start to sink to that level, and we're not that far away.
No, we're not. But the question is, how will discretionary blenders blend ethanol with gasoline,
right?
Relative to ethanol being more expensive by a fair degree to gasoline this afternoon. So I know USDA today raised their ethanol forecast to 5.15 billion bushels, but I am pretty cautious about that because that demand happened early. I'm afraid as we get into the end of the crop year that ethanol demand will start to be ratcheting down. We're already seeing blenders cutting their blend rates, if you will, on unleaded gasoline in the last 2 weekly reports from EIA.
Virginia, you mentioned something that I want to go back to very briefly.
Sure.
Some of our viewers may not be really familiar with short-dated options. You mentioned calendar spread options, short-dated options. Can you give us the 30-second elevator speech on these products? Because I know that you do trade them on the trading floor.
Right. They're offering a new product that we can trade on the new harvest, the new crop. It's basically a way to be able to put a hedge on for the new crop over a short period of time, basically a way to really watch for the reports that are coming in. It's like we're going through the first quarter of this year. There's a number of issues that are happening around the world, whether you have economic issues, the dollar being strong, and you need to really hedge the crop that's coming up. Now, certainly in wheat, it's going to be a very big component because we've got wheat in the ground right now. So people, using that, it's a tool that we can keep the prices a little bit more affordable, so that you would use that as a way to offer some insurance. So, for example, if you wanted to hedge the wheat crop coming in July, you can trade a short-dated option that actually only trades for 30 or 60 days, just through the winter months, months until you're protected. And then after that, the planting season starts to get in. You can get a little bit better idea of what's going to happen, and you're not really out so much of a premium. So that offers that. We also have weekly options too, that there's a number of people that will normally trade that. It's traded very big in corn, and for the last week there's been a lot of trading back and forth in that, and everyone's, you know, trying to guess what's going to happen when the reports come out. And you can be right or wrong, and it's an inexpensive way to kind of hedge your bet.
That's great. Thank you. You mentioned something also there, and both Dan also said, you know, looking ahead, new crop. So is it too soon to look ahead? I know it's only January, but what, if any, direction do you think producers here in North America are taking from today's reports? Prospective plantings, are they looking ahead toward those planting decisions for this new year, this new crop year?
Well, for the way I'm looking at it is they're definitely going to watch where the weather is. Where the market has been the last couple of years, it has been so high. So all farmers are just like gnawing at the bit to try to figure out what they're going to plant, because you know there's so much, you know, premium to have with it. But now that the markets are a little bit lower, everybody's really tightening their belt and trying to really predict, you know, what they can plant, that they can actually, you know, guarantee that they're going to make some money. So it's going to be very, you know, they're going to be very tight about what they're going to put out there. And I think that watching where the weather is going to be, certainly around the world, if South America has a huge crop, I think that's going to dictate, you know, what our acreage is going to be here. I mean, right. The only reason that wheat is even as high as it is, too, I don't want to say the only reason, but one reason is that they have lowered some of the acreage. That being said, worldwide supplies are huge in wheat. So, you know, there are so many moving parts, and the decision isn't going to be made for a couple of months yet.
Dan, do you agree?
So Chris, I would answer it like this, I guess. In the next, before the seedings report that comes out the end of March, there's probably we think 3 ingredients at direct price. Agreeing with Virginia, it's weather, particularly in Latin America. Though we think, again, it'll be hard to get that Brazilian soybean crop much below 94 if we start to get some rain. We then also believe it's financial markets. We talked about the dollar and crude oil. Those are big ingredients, and they're not pointing up right now. And lastly, it's this view of what our farmers going to plant. And so, you know, our studies and surveys of producer groups shows around 90 million acres of corn, somewhere around 86 million acres of soybeans. That would be a record soybean total. I would point out today that in the winter wheat seedings number, we lost 1.95 million acres, almost 2 million acres of winter wheat, mostly soft red winter in the Midwest. So that can go somewhere else. Right. We think corn or full season beans. And so a lot of us, particularly me today in corn, started to ratchet up our new crop corn seedings number because of the winter wheat seedings estimate that came out today. Nonetheless, we still think we'll have enough winter wheat and spring wheat if we have good planting weather. But all combined, the U.S. planted about 326 million acres of cropland this year, with some acreage coming out of the conservation reserve. We think that number could be 326 or 327 next year. So a lot of supply, as Virginia says, if weather is good, and that's what the farmer needs to be thinking. He needs to wake up each morning and say, we're going to have big crops and lower prices unless there's a pattern change that would give us a threat across the northern hemisphere.
Well, and speaking of winter, we just had a very cold week across the U.S., Midwest in particular. I did see some reports from Reuters and others that potentially farmers are concerned about winter kill in wheat. Is that something we're still keeping an eye on? Are we feeling better about the weather now that we're in the 20-degree range?
Well, it's interesting that you would say that, because that was such a big play just a couple of weeks ago, and it was the true adage of buy the rumor, sell the fact. The rumor on that absolutely took the market up 6 days in a row up to that 670 mark. And as soon as it got cold and it dropped below zero, the market went straight down. So basically, the idea that the winter kill would happen, we got the bad weather that we received, but it didn't really do the damage that we thought. Even though there wasn't enough, there wasn't enough snow out there. But I guess when you really look at it, it didn't happen the way they thought it might happen.
Again, kind of sticking on wheat, Dan alluded to it earlier, the tariffs, the export tariffs that Russia is going to be placing on exports beginning February 1. Ukraine, I believe, came out and said they are not going to be following the same suit. Right. Are we still concerned, though, about these tensions between Russia and the Ukraine having a considerable impact or any impact on either grain exports or the markets coming out of Eastern Europe?
You know, Chris, we never know in politics. How do we know what Mr. Putin is going to be doing any day soon?
That's a wild card for sure.
And so we don't know. But Mr. Putin seems to have enough issues at home, the value of the ruble, falling crude oil prices, recession in his economy, that it's unlikely that he'll be spending a lot of time and effort thinking about getting that slice of Ukraine he'd like to have so he can have a passage to Crimea. Generally speaking, I think the Russians are encouraged by what is happening. By that I say I want the listenership and your clients to understand that Russian farmers are very happy right now. And they're happy because new crop wheat prices are at record highs. And so the ruble falling 57% has given them a bolster because all world grains are traded in dollar terms, and they are seeing the best prices that they've seen in their life. And so as I talk to our Russian farm clients, you know, they tell the argument quickly goes from, well, Dan, don't worry about the market. Should I buy the Mercedes or the Audi? And they're quite happy. So I do believe that the Russians, as we go forward in time, will be expanding their grain production with this ruble decline. And that's something that's happening not only in Russia, but also Brazil, also in a lot of other countries to the demise or to the disadvantage of the U.S. farmer.
Let's talk a little bit about Brazil. I know that you've been bolstering your team with some new additions covering South America. Both of you are very well versed in overseas markets, but South America, Brazil, what are we seeing coming out of Brazil? I know we're getting close to harvest here. Last week there were some reports of early start to harvest in Brazilian soybeans. What are you hearing out of Brazil? How will what is happening in South America impact decisions among farmers here?
Well, on the trading floor, we're mostly watching what's happening with the crop, with the reports coming out. I think that Dan probably has really the better numbers coming out. Clearly, South America is a player all the way across from Argentina, Brazil. We watch so closely, but there's other output that comes from South America, and it's beyond like an emerging market. It really started out that way 10, 15 years ago, but it is really coming alive. The next emerging market comes from where I would say like the monsoon region, from India down from Indonesia and Malaysia. But I think that absolutely Dan is the master of what's happening from South America right now.
Just our 2 bits from what our team sees is that we see a soybean crop today of around 96 million metric tons. The dryness in the north and through center west has some issue, but we're harvesting beans now, as you say, in northern Mato Grosso. IMEA, the Brazilian agency that watches Mato Grosso, estimates that harvest will be up around 10% by the end of this month. And the yields that we're getting, Chris, are up about 10 to 15% from last year. So we like what we see. We think Brazil has that potential. Today says is 95, 96. USDA is at 95 on their bean crop. The other thing I would point out to you is that because of the fall in the Brazilian real, the winter corn crop could be as large as last year. We call it the safrinha crop. So Brazil could do a 77 or 78 million metric tons and again be a competitor against the United States. And so these are some issues that I think U.S. farmers need to be aware of, but we surely like what we see in beans at this juncture. And if the weather patterns or forecasts are correct, we would imagine that Brazil does all of 95 and will be harvesting in big fashion by the middle of February, Valentine's Day.
That definitely is going to put some pressure on the U.S. bean crop at that point.
Oh, we would think so. Yeah. I mean, that supply pressure will be there, Virginia, and we'll get the Chinese, which are still buying a few cargoes of U.S. shipping over completely to Brazil as their basis relationships start to change.
Yeah, but that'll really create a shift in the market.
But the Brazilian farmer hasn't sold a lot. That's what's so surprising, and he's been rewarded because of the falling real. So he's been bailed out, at least for now.
Well, it's interesting that you bring up the Chinese purchases. We've talked mostly about the supply side. What about demand? Are U.S. farmers, our South American farmers, happy with demand from China right now? Are we hoping to see greater demand in 2015? What are your thoughts?
Well, I think that we always are hoping to see greater demand. To really put a finger on it, it's really trying to tie down like a cloud. It's so difficult to find out what they're doing, and I think that purposefully, that's kind of like the way they operate. Or they'll put out that they really want to get something started. They have they earmarked that they want to make some purchases and then back out of it. So that's been the recent history. but we expect that it's going to start to increase, and especially in the southern region. What I was saying about the monsoon region, that it is really a big emerging market that's going to be coming out of that whole area. And I think that at some point that it will be difficult for them to be as secretive as they are. They have to be a little bit more transparent to step up and get it. But clearly, they're always a wild card to be played, and everyone's going to be watching it. China's going to step up. Oh, China's starting to buy something. The idea that they're going to just make a run on something coming in with beans or corn. Who knows? Maybe one day they'll decide to open up their markets and with corn and wheat the way they have with beans. It remains to be seen, but you never know. Things could change.
We can only hope. We can only hope.
Right.
Virginia, I think in the next couple of days we'll be watching to see if the Chinese are price buyers on this break here in Chicago. If we get close to $10 and the Chinese step forward, that should give us some support around that level.
Correct. That's a big number right now to be watching. Right?
Yeah,
that's the only one that's going to really bring some support.
If they don't show up, where do you think the market could fall to?
It's going to move into like the technicals. There's going to be technical people because there really isn't anything else to hold it back up. Like all that numbers have come in. I mean, I was surprised that it rallied as far as it did, actually. So when it got, we got, oh, the market might get up to $10, and all of a sudden, boom, it went through, $10.50. I was like, what? What happened here? And this just goes to show that the volatility in the market is there. It always is overrunning its objective, and so it lets you know that nobody's bigger than the market there. So who knows? Maybe it should come down to 9.75, and next thing you know, it goes to 9.50, and then a little bit more, and then it will ease back up. I mean, if you think about when the report came out today, everything went absolutely opposite. Wheat rallied like 8 cents and then came back down. Corn dropped and rallied, and the same thing with beans. Like beans dropped, then rallied, then came back down, and then kind of settled where it was. But who knew? Who knew that beans were going to rally with a number coming out like that? Wheat at the same time, it just started to churn all the way up and drop the dime just like that. So even though that's just a little microcosm of how the market works, that overall it's almost working in that same direction. It gets overbought and oversold often.
Very much in short periods of time.
We just have a couple of minutes left, and so I thought what I would do is ask for any final comments or remarks that you have. Dan, why don't we start with you? Is there anything that we didn't cover today that's important, or any final thoughts as we wrap up?
No, really, Chris, I think we've got a lot of it. I'm concerned about the demand profile in the grains, corn and wheat. Wheat demand in the last quarter was a record low, which is not something I want to see. Corn demand came down because of feed and residual. We had that number below a year ago. So, I've got the tight stocks in the grains, but I don't have the demand. And soybeans, I've got more demand from China, which we see by the record shipments and purchases paced by that country. But I've got so much supply around the world, particularly here in the U.S. So it's hard to find a story, but our vision is that the bean market leads the way down. Corn and wheat may be better supported on breaks, but there's still no story to get me really bullish unless I have a weather problem. Maybe, Virginia, you see it a little differently.
No, I'm really kind of on board with you as well. The market is a little bit sinking. We were hoping to get something. In order for the market to really go, we really do need something to feed the bull and get this going. I don't see that on the certainly near-term horizon, and so the market will continue to sink a little bit, definitely lower. It's looking lower unless something that we don't see right now, but that could change really in a day or a month. So always got to be watching that. That's what makes the market so viable to be watching all the time.
Very good. Thank you so much for your time. I appreciate it.
Thank you.
Thanks to our guest, Dan Basse of AgResource Company, and Virginia McGathey of McGathey Commodities. We will have an archived version of today's panel available on cmegroup.com/crop reports, as well as our YouTube channel. That's youtube.com/cmegrouptv. Thanks so much.